Why is the stock market ignoring the Sydney lockdown? Will US reporting season keep the stock buying happening? And is the coronavirus the greatest buying opportunity ever for the patient long-term investor? I'm Peter Switzer, he's Paul Rickard, and we're
mad about money.
Well, you didn't need to do that, Paul, but you did it anyway. Well done. All right.
I thought that was my job.
The lockdown has really caused enormous innovations, but let's go to the first topic, really important. Is the Sydney lockdown being ignored by the stock market?
But Peter, I probably disagree with you on this. I think it is to us a little bit. Maybe we'll see a bit more impact today, but as people realise that this lockdown's going to continue at least for a couple more weeks. But look, we're getting the lead from the US. The markets are still positive. We've had a positive momentum in our market now since the 20th of March last year. And that means that dips get bought and markets head higher. And at the moment, this lockdown's not enough to stop the Australian economy continuing to recover. Not at a slower pace, admittedly, but that's why I think the market's not taking too much impact of it. I mean, certainly, I think everyone thinks we're going to be out of this lockdown, within a couple of weeks. It's not, but we could see how things play out there.
Yeah, Paul, I think from my point of view is that our market probably would have been higher. There are stocks that are losing ground because of the lockdown. But you're right, the overall movement is up, and the magnitude of the fear factor coming out of the lockdown is often more in the minds of normal people rather than the stock market. And we know the stock market is buying for 6 months ahead. And in 6 months' time, a lot of Australians will be vaccinated. And that's another reason why the market's a little bit negative here as well. The vaccination rollout hasn't been great.
Yeah, and you look at the prices of the bank stocks, Peter, they really haven't done much the last couple of weeks, but they haven't come off either. And that's because the banks know that, look, they'll get through this. There's a lot of government money being spent. We've got a relief package now from the New South Wales and Commonwealth governments. And that means that we won't see a huge blowout in bad debts. And so the fear that people had in February last year at the height and in March last year, we've been through that. We understand how it's going to play out. Governments will throw everything at the kitchen sink to get us out of this. And that's why the market can look past this.
Okay, let's go to the next big topic. This is US reporting season. I've seen it absolutely spectacular. I think I've seen a number of industrials in the US up 570%, some crazy number. Is this going to be the high water mark for the stock market in the US, and will it come off the boil or will it keep on crawling higher?
I think there's still so much momentum in the US, Peter, that you'd be a very brave person to say the trend is over. So, the most likely outcome is the market keeps crawling higher. Look, it is, of course, the comparisons are of the corresponding quarter last year. This was a lockdown quarter in the US in this period last year. That's why the numbers are going to be through the roof. But what the market's really going to be worried about and interested in, Peter, is the forecast. In other words, not so much what happened this quarter compared to last quarter in the same quarter in 2020. We're really looking for the outlook statements. That's what really will make or break this reporting season in the US.
Yeah, and I think you're right, Paul. The important thing is that the economic growth forecasts are still very strong. So a CEO who comes out and reports a fantastic quarter this year because of they're comparing themselves to a crappy quarter during the height or the depth of the coronavirus, they're still looking at a very good business outlook, at least for the next 6 to 9 months. So I can't see many CEOs coming out and spooking the market. So I think you're right. I think the markets will keep crawling higher. You can see a little bit of a sell-off, but I would call that a buying opportunity if I saw that kind of thing happening.
Yeah, it'll be very much the confidence, Peter. I mean, there's obviously analysts have forecasts, for the next quarter as well. And so the market will be looking for guidance from the companies and the confidence with which the CEOs talk about how business is the projection and the trajectory of their business in the coming, 3 to 12 months. And that's what the market is looking for. And if there's confidence there, if the trajectory is really positive, share prices will go up and the market will go up overall.
Become an annual Switzer Report subscriber and get unprecedented access to my 7 investing principles, where I reveal the exact strategies I use to invest. You'll get access to an exclusive PDF, video recording, and even a free copy of my book, Join the Rich Club. With a 30-day money-back guarantee, a Switzer Report subscription is one of the wisest investments you can make towards your future. Find out more at switzerreport.com.au/YouTube offer, or click on the link in the description below. And now our final topic, Paul, looking at this coronavirus and what's done to the stock market, do you think it actually has created the greatest buying opportunity ever for the patient long-term investor?
Well, that's a big call, Peter, to say the greatest buying opportunity ever. I'm going to throw it back to you, Peter. I don't think so, but why are you asking me that question?
Okay, well, the reason is this. I'm thinking about the stocks that will be better in 6 months' time, in 12 months' time, and in 2 years' time. That's what the long-term investor is looking for. And so I looked at a company that both you and I like, namely Qantas. Now, before the coronavirus, this was it was a $7.34 stock, and it's now $4.74. Even over the last 6 months, it's dropped from $5.50 down to $4.74. And I think that's been linked to the poor vaccine rollout and the lockdowns as well. Now, in a year's time, I think the vaccine problems are over. I think the lockdown problems are over. And so the share price could easily rebound. If you can make, for example, $2 and you go to $6.74 on $4.74, that's a pretty good return for a blue chip company.
Yeah, I mean, there are some spectacular opportunities for companies that have really been in lockdown mode and their business has been disrupted for the whole period. I think that's what you're talking about. Look, if I look at the market overall, I mean, other parts of the market have been so strong, the banks, the materials, all those sort of companies. Are they the greatest buying opportunity? Absolutely not. But, some of the stocks have been hit really hard. And Qantas is a great example because it is a great company. It's one of the world's leading airlines. You can't argue about that on any other metric, whether it's safety or it's passengers traveled or it's dollars made on per revenue travel, whatever the metrics are, it stacks right up there with any airline in the world. And in that sense, Peter, I agree with you about Qantas. I don't think there are too many in that category, but there are certainly some companies that fit the bill.
When it was all said and done, Paul, when it comes to buying opportunities, they're not always there at the same time. But if you go looking for the quality company that's been beaten up by this whole coronavirus thing, and you go into the future, that's when I see the buying opportunity. I'm Peter Switzer, he's Paul Rickard, and we're mad about money.